Unlike traditional currencies, Bitcoin is not issued by a central bank or backed by a government. For investors, buying a Bitcoin is different from purchasing a stock or bond because Bitcoin is not a corporation. Consequently, there are no corporate balance sheets or Form 10-Ks to review, no fund performances to compare, or other traditional tools for choosing an investment. In today's video we will be learning about what influences Bitcoin's price so that you can choose it as an investment with greater knowledge. At Finance Doc, we will be sharing more explanation videos related to cryptocurrencies, trading, forex and many more. So watch this video till the end and hit the subscribe button. And click on the bell icon to get notifications for our future videos. So let's begin the video. The monetary policy instruments, inflation rates, and economic growth measurements that generally affect the value of a currency do not apply to Bitcoin because it is neither issued by a central bank nor backed by a government. The following factors affect the price of Bitcoin since it functions more like a commodity being used to store value. Bitcoin's availability and the market's demand. The price of creating a Bitcoin via the mining process. The number of cryptocurrencies in competition. Laws restricting its usage and sale. News and media. Effects of supply on Bitcoin's price. An asset supply is a key factor in setting its price. An asset that is in high demand is more likely to have high pricing than one that is in large supply, which will have low prices. Since there will only ever be 21 million manufactured and only a certain number made year, the supply of Bitcoin is typically well publicized. Its system only permits the creation of new Bitcoins at a predetermined pace, which is intended to decrease with time. As a result, there will be less Bitcoin available in the future, increasing demand. This is comparable to a drop in maize supply, which would result in skyrocketing corn prices if harvests were lowered every 4 years until there was no more to be gathered. Bitcoin's price and demand. Retail and institutional investors have become interested in Bitcoin, and demand is rising as a result of more media coverage, investment experts, and business owners praising the value that Bitcoin has and will continue to have. Bitcoin has also gained popularity in nations like Venezuela that experience severe inflation and depreciating currencies. It is also well liked by people who transfer big sums of money for nefarious and unlawful purposes. This indicates that a combination of a gain in demand and a decrease in future supply has driven up the price of Bitcoin. However, it still experiences boom and bust cycles in its price. For instance, the price of Bitcoin experienced a surge in 2017 that was followed by a protracted trough, 2 rapid spikes, and downticks through 2021. Production costs and Bitcoin price. Similar to other commodities, production costs are a major factor in setting the price of Bitcoin. Research suggests that the price of Bitcoin in cryptocurrency marketplaces is closely correlated with its marginal cost of production. The production cost for Bitcoin is essentially the sum of the direct fixed expenses for the infrastructure and electricity needed to mine the cryptocurrency and an indirect cost associated with the algorithm's degree of difficulty. A network of miners competes to decipher an encrypted number in order to mine Bitcoins. The first miner to accomplish so receives a reward of newly created Bitcoins as well as any transaction fees earned since the last block was located. It takes a lot of processing power to use brute force to solve the hash in order to unlock a block and receive a reward. The miner will have to spend a lot of money on numerous pricey mining equipment. Additionally, the Bitcoin mining process uses a lot of electricity. According to estimates, the Bitcoin mining network consumes more electricity than certain small nations. How competition affects Bitcoin's price. Despite the fact that Bitcoin is the most well-known cryptocurrency, there are hundreds of other tokens competing for capital. By 2022, Bitcoin will control the majority of cryptocurrency marketplaces. But with time, its power has diminished. Over 80% of the total market capitalization of cryptocurrencies in 2017 was made up of Bitcoin. That proportion fell to less than 50% by 2022. The fundamental cause of this was growing acceptance of alternative currency and their potential. For instance, due to a rise in decentralized finance, Ethereum has become a fierce rival to Bitcoin. Ether, ETH, the cryptocurrency that serves as gas for transactions on its network, has attracted investment from investors who see its potential for redesigning the rails of contemporary financial infrastructure. 20% or more of the total market capitalization of cryptocurrencies is made up of Ethereum. The popularity of other cryptocurrencies has increased as they are continually being introduced. Other coins like Tether, BNB, USD Coin, and Solana are reducing the market share of Bitcoin. Competition has drawn investors to Bitcoin even as they have taken some of their dollars from the ecosystem. As a result, there is now more demand for and knowledge about cryptocurrencies. Bitcoin has benefited from the attention as a sort of standard-bearer for the cryptocurrency ecosystem, and its prices have stayed high. Regulations and Bitcoin's price. After a financial crisis brought on by lax restrictions in the derivatives market, Bitcoin was introduced. The ecosystem of cryptocurrencies is known for being devoid of restrictions and borders because it is still unregulated. The deregulation of Bitcoin has both advantages and disadvantages. It can be used freely across borders and is not subject to the same governmental constraints as other currencies because there is no regulation. Governments and other interested parties are still pushing for cryptocurrency regulation, nevertheless. The emergence of a regulatory framework is imminent, and it is unclear what impact it will have on the price of Bitcoin. For instance, cryptocurrency decisions made by the Securities and Exchange Commission, SEC, in the US may have an effect on the price of Bitcoin. A few weeks after the SEC approved the ProShares Bitcoin Strategy ETF, the first US Bitcoin-linked ETF, the price of Bitcoin soared to $69,000 in October 2021. But a few months after it reached that level, the price of Bitcoin was circling about $40,000. The September 2021 restriction on Bitcoin trading and transactions in China has an impact on the supply and demand of the digital currency. China's mining operations were compelled to leave and relocate to nations that support cryptocurrencies. Prices dropped from around $51,000 at the start of September to roughly $41,000 by the end of the month, but they immediately rose back to their prior levels as business picked up again.
Thank you for watching this video. If you like this video, don't forget to hit the like button and subscribe to the channel so that you don't miss out on our upcoming videos.